Welcome to Direct Credit Funding Podcast with Jason and Brooke. How are the two of you today?
I'm doing really well. I'm excited to be back and doing this again.
Me as well.
So you ended episode 1 with ask a question, and you got questions, my friend.
Yay for us.
This is the question that stuck out though. Ready? The internet question was this from Instagram. Should I borrow or use the cash I saved up to fund my machinery that I need?
You should 100% get a loan, borrow, yes, 100%.
Yeah, absolutely. So let's tell them why.
Okay. All right. Well, there's so many reasons. There's so many benefits. Number one, it allows you to make a purchase to expand and grow your business that you otherwise wouldn't be able to do at that point in time unless you had the full cash savings to purchase the asset or the widget maker, for lack of a better word, to grow and expand your business to the next level.
We talked in the last episode about why it's important to be able to retain that cash. And I think that's a really important thing to talk about here. So if we're looking at your business's assets as a pie and what you can do with those to be able to bring more money in, to be able to create a bigger company, right? That's the point of all this is like, how do I get the most return on my investment? The more pieces you can put that out to, the more money they're going to bring in. Now, if you take all of that cash, even though you have it, and you put it into one piece of equipment and you're not paying interest, you're saving some money there, but you're only expanding your business by one thing to bring in more money. Now, if you can cut that up and put it into multiple things, or even just have cash on hand in case you have something come up as a business that you need to be able to have the money in and all your assets aren't already expanded into one item, you just have so much more flexibility and so many more options of what you can do to bring and grow your business more quickly.
As a business owner, the number one thing is you want to have cash on hand to take advantage of opportunities, and that's something that a smart business owner has. And if you have this $50,000 pile of money that you need to buy a machine that creates $10,000 a month worth of income, you can give this $50,000 and buy that machine, and it'll make you $10,000 a month. But if you were to say buy 2 of those machines, you have to wait till you have another $50,000 so you can buy your second machine that you can start doubling your revenue. Or you can take a small piece of a couple $1,000s a month, put it on those machines. They're still going to make the same $20,000. That's the magic of this whole financing thing that we do anyway, is it's how much money that equipment's going to make you. And you're putting $3,000 or $4,000 a month on these 2 machines that is to make $20,000 a month each. So now you could get 2 more and you'd have $40,000 a month in machinery and only have $5,000 or $6,000 at work. You have so much more capacity, well, and you have so much more cash flow to work with.
Right.
And that lets you hire people and grow people, and that's what we're going through our own things right now, is growing and expanding our company.
Well, I think one of the things that we do as a company is, you talked about being a smart business owner, right? If you're a smart business owner, the first thing you need to do is understand what you have, what your assets are, how much money you have, and what you're playing with. Like, what are you bringing to the table to make sure that your company stays financially sound? Our job on the other end is to hopefully know that you've already done that. You're going to bring the information to us, and we're going to say, yes, that checks out. This is a sound investment for you that we want to help you do. If you don't have the ability to take on, for instance, a working capital loan, which is usually paid back daily or weekly, we're going to let you know that is not a sound investment, and you shouldn't be doing that. You don't have the money in bank to be able to make that investment, as opposed to a piece of equipment that you do have the ability, because it's a monthly payment with less interest, et cetera, et cetera. So starting at the very beginning as a business owner, if you're looking at do you borrow or do you pay cash, that means you have an understanding of your business enough to know that you have the cash on hand to be able to do it. So we're going to help you learn how to use that cash in either multiple pieces or one, or hiring more employees, et cetera, to be able to bring in the most investment on that money that you have.
As a business owner, you're buying the equipment because your business is growing and expanding, right? Yeah. Theoretically, that's why most business owners are buying equipment.
So, or replacing a piece that's broken that you need to be able to operate,
et cetera. And it generates them income.
It makes more financial sense for you to borrow, because you're going to make more money off of that and be able to expand your services even bigger
and faster
at an incremental rate that is so much greater than the amount of interest that you're going to pay into it, that it's going to open up other avenues for them, right? If they're needing more equipment and they buy that one piece of equipment, they get more money in, they get to continue expanding into more pieces of equipment, or more employees, or more options, whatever it is that they need, the packaging, the inventory, more trucks, whatever it is. Like, the options are so vast that borrowing allows them to continue to build that credit, build their
And leverage. I mean, that's the other big part there
Exactly.
too. You can leverage. You could literally, in theory, spread out that $50,000 and by all those payments, you could 10x your business. By leveraging that same $50,000, if you had the infrastructure to handle the workload. There's some what ifs in there, of course.
Sure.
If you have that infrastructure and the capacity to borrow at that, you think of how quickly you can grow your business. So yes, do you borrow? If you want to 10 times your business, 10x it, I think is the word that we use nowadays. You want to 10x your business, borrow and leverage that money and 10x your business.
Yeah. Having cash on hand as well. Like we talk a lot about expanding business, right? Getting the more pieces to bring in the more money. The pieces can only do what you have the people to make them do. And if you have that cash in hand, then you have the ability to pay salaries, to pay wages, to be able to get everything that you need to actually use the extra money that you have coming in to make that a bigger business.
We really enjoyed this question from Instagram. I know that you two could probably speak for hours on this, and we'll cover this more in some further episodes. But please keep those questions coming. Jason, where can everyone find you at?
You can find us at directcreditfunding.com. You can find us on all the socials, Instagram, Facebook. Subscribe and hit the like buttons below. Vote for us as your new favorite. Keep the questions coming. I love questions, whatever they are, no matter how hard they are. I am happy to answer them. I have lots of answers for you.